Today we will be joined by Richard Thomas, who will join us shortly. The aim of this webinar series has been to bring together communities and keep us connected and share all our creative ideas. You can get involved today by using the live chat feature at the bottom of the screen. We already have questions which some of you kindly sent in, and we've had a look at those, so we'll have answers to a number of those. The format today is that I'll introduce our special guest, Richard, in just a second. Richard will run through a 10-minute PowerPoint presentation, and then we'll come back for a Q&A. There's been, as well as the big changes to our lives, there's been quite a few changes to the tax laws in this country, and your tax return is coming up soon. So hence the reason for this particular subject. Our guest today, Richard Thomas, is a chartered accountant with 20 years experience, a member of the Chartered Accountants of Australia and New Zealand, and he sits on that advisory group and is a registered tax agent. Richard, however, has another life. He's a musical theatre performer in Melbourne, and he's appeared in a number of big productions and is a regular artist for St Paul's Cathedral and the Melbourne Singers. He actually won a Best Actor Award in 2018 in the Victorian Musical Theatre Awards, and has released a number of albums which have been critically acclaimed. Richard, we'd have to call you the singing accountant, so thank you for joining us today.
Thank you, Jeff, for that very warm introduction. Yes, singing accountant, but just an accountant today for the many viewers out there. And look, thank you to yourself, Jeff, and the AMEB for this opportunity to present some ideas of tax for teachers. The world has certainly changed, and Australia has certainly changed in the last 3 or 4 months. That has brought about significant tax reform and concessions and incentives that have been available to a wide range of taxpayers. And I'll cover a bit today around some of the deductions and some of the tax concessions that are available. As Jeff mentioned, I'll present for about 10 minutes on some ideas, and then we've got some pre-prepared questions, and then there might be some live questions as well, so feel free to send them through and Jeff will manage those questions. So Alana's driving the PowerPoint today. Hopefully, Alana, you're there and can project the PowerPoint on your screen. I'll just see if I can go to speaker view. I can't see, Alana, that the first slide is up there. Oh, yes, here we are now. Thank you very much for that. So what we're looking at today is whether you're claiming all the deductions you're entitled to. And as I said at the outset, things have changed since COVID-19. Thanks, Alana. If we look to some basics, though, firstly, of the tax deduction provisions, and what we look at in tax deductions, whether you can claim a tax deduction for an outgoing, we talk generally about 2 positive limbs and 3 negative limbs. The 2 positive limbs that are available, that basically means it's an open door if you can pass one of the positive limbs. So if you're an individual taxpayer, you can deduct a loss or expense to the extent that it's incurred in producing your income. So there's got to be a direct link between the expense and your income if you're an individual employee type taxpayer. Then there's a second positive limb that opens the door, and that's for business taxpayers. And essentially that's a slightly broader operation that allows a business taxpayer to deduct an expense incurred in carrying on a business to create that income. But then there's 3 negative limbs that carve out the ability to claim a tax deduction. And in simple terms, dot point 1 looks at something that's capital in nature. Okay, so something you buy that is for a longer term than just that particular year. We talk there about buildings or motor vehicles, but perhaps relevant to the audience here today are musical instruments. Second dot point there is if an expense is private or domestic in nature. Okay, so we're looking there at clothing expenses, even if they are related to business, although in the music context that can have a variant, and we can look at things like costumes that might be applicable that could be deductible and not private in nature. But essentially, if your clothing is deemed to be a private cost in nature. Similarly, meals and entertainment, personal activities. And then the final dot point there is what we talk about, expenses that relate to exempt income, and where that comes in the musical context probably more for your students than yourselves, is competition winnings. So if you've got a competition winning that might be exempt from tax, where you don't have to pay tax on the competition winning, it goes hand in hand that therefore you can't claim a cost associated with that competition winning, such as an entry fee or travel to get to that competition. So they're the broad provisions for general deductions. We'll go over the slide now, thanks Alana, and talk about some of the specifics. Some general deduction provisions that we can talk about here in this context are deductions for repairs. So if you have a repair to a musical instrument, then that repair would be deductible. But it must only restore the function of the asset. So it can't change the character of the asset. So if you are having your musical instrument repaired, and it has restored that functionality to what was before the repair, that's okay. But if you are changing that instrument completely and modifying it, then it may not be deductible as a repair. Phone and internet expenses, taxpayers can claim a deduction from phone and internet costs to the extent that they're work-related, and records are needed if you're claiming more than $50 on those expenses. Tools and equipment, again, taxpayers can claim a deduction for tools and equipment they use to perform their duties, musical instruments if they're under a certain amount for teaching, and if that amount is $300 or less, then you can claim a deduction. So we'll go over the page again, thanks Alana. Now, yeah, rules relating to teachers. So I encourage you, maybe if you want to take a screenshot or a photo of this particular slide, to look at Google search an ATO ruling. TR stands for tax ruling, 95/14. That is a ruling that's been released by the tax office relating specifically to teachers. And it looks at some of the deductions that the tax office will allow, recognising that teachers are perhaps more unique in some of their deductions that they should be able to claim as being relating to work as opposed to other professions. And you can see on the screen there, I've sort of handpicked a few common deductions that appear in TR 95/14 that I encourage you to have a look at as you prepare towards 30th of June, and or you look at your receipts back over this current financial year. Clothing, uniforms, footwear are allowed. Computers, software, depreciation for computers and software, conferences, seminar, training courses. Often teachers will have a bit of a second think about some of these things, but they are deductible if you've had to attend a conference, or a seminar, or a training course and incurred a cost. Similarly, excursions, school trips, music camps are all the cost of not only the excursion, school trip or camp, but also travel to and from and any other ancillary costs relating to those experiences. First aid courses, typically for teachers. Then we'll come to a bit more, we'll expand on home office expenses in a moment. Insurance, tools and equipment, you might have instruments that are insured. Professional library, so your books, your resources, etc. Self-education expenses, and of course your union or your professional association fees. They're deductible as well, and that ruling specifically outlines more information. So over the page, thanks Alana, we'll look now to some of the COVID-19 home office alternatives. So in recognition of the new norm that's been brought about by this pandemic, the ATO have announced some home office alternatives, given so many people have been forced to work from home. So these are temporary simplified announcements that relate from 1st of March 2020 to the 30th of June 2020. And you can see some of the running expenses that are allowable under the home office provisions. We'll go over the page, thanks Alana. So in summary, there are 3 home office alternatives available in the financial year 2020 that we're about to end. Normally, you would only have one method, and that's the third dot point there, the actual cost method, which probably a lot of you would be familiar with. But there are two other alternatives that you can avail yourself of this year and this year alone, unless it is extended. The shortcut method is a simple method where you claim 80 cents for each hour you work from home. Okay, so if you've kept a record of the hours you are working from home during this period from the 1st of March, then you can claim 80 cents per hour, and that is designed to cover all deductible running expenses, so no other expenses relating to your home office. The next method is the fixed rate method, and that's a 52-cent method for the variable home office costs such as heating, cooling, lighting, cleaning, and your depreciation of some of your home office furniture. But you are able to claim direct costs. Unlike that shortcut method, you're able to claim direct costs for things like phone, internet, computer consumables, stationery, etc. And you can claim the work-related proportion of a decline in value of your computer or your musical instruments or laptops or similar devices. So what you can do, and of course the actual cost method is per the normal home office expense rules that a lot of you will probably be familiar with. What I do as a tip for year end this year, if you've got the ability, you've got the data to compare all three and choose the best. That's perfectly allowable for the ATO for this particular financial year, whereas normally you've only got one method, but this year you've got three to choose from. Thanks, Alana. The other incentive that's come out of COVID-19 is the immediate write-off provisions. This particular threshold has increased to 150,000, and businesses with a turnover of under 500 million, which I'm assuming most of the audience that relates to. But if you're running a business as a music teacher and you're an ABN music teacher, then you can avail yourself of some of these instant asset write-off provisions. And basically what that does is overrides the negative limb that I spoke about at the start of the presentation, and that negative limb said that if an item is capital in nature, you can't claim a deduction for it, rather you need to depreciate it. However, under these immediate instant asset write-off provisions, you now can claim, if you are running a business, if you're a business taxpayer with an ABN, you can under these write-off provisions claim a deduction for that cost in the year that it is installed and ready for use. So that's something to have a look at as well. Thanks, Alana. So the final one now that I'll cover off is work-related travel. You can see on your screens there that taxpayers can claim travel expenses if they're incurred as a result of producing assessable income. A lot of you would hopefully be aware of the methods that are in use. There's a cents per kilometre method up to 5,000 kilometres of business travel in the year that really is only required, as far as substantiation is concerned, you really only are required to keep a diary and an account of the business travel that you have undertaken. The other option is a logbook method that is 12 continuous weeks that are representative of your general business use of your vehicle. If you keep a logbook for 12 continuous weeks, then you are able to claim additional costs against the proportionate business use of that logbook. Other travel expenses that you can claim, public transport, air travel, taxis, road tolls, etc., that you can see on your screen. So I encourage you to review your records after year end, and if you've got any questions, feel free to yell out or have a discussion with your accountant. So I think that's it now. Alana, if you can go to the next slide, I think, oh, sorry, yeah, just closing out there. I'll leave it up there for 10 seconds or so for people to have a look at for motor vehicle claims that I mentioned before. And there's those two methods down the bottom that you can avail yourself of. It might come up in question time that people are often questioning whether their home is their business, and we can address that if need be as part of the questions. So Jeff, that's a quick snapshot. That's tax in 10 minutes, but I'll hand over to you to take it from there.
The first question coming up now is regarding personal superannuation contributions as tax deductions versus government co-contribution? Which is highest return to us? I guess that means to the person. And what do you have to declare to super company to claim both of those, e.g. notice of intent?
Yeah, sure, Jeff. Look, this is a tricky question, and it really does depend on the individual circumstances and probably requires a little bit more information. The co-contribution is a maximum limit of $500. So we're not talking about a great deal of contribution into super. If you make a contribution of $500 subject to income tests, then the government will co-contribute an amount of $500. The question of which is the highest return to us, well, that largely depends on the taxable income of the individual in question. The higher your taxable income, the way marginal tax rates work, the higher your taxable income, the higher marginal tax rate you will pay as you creep up the brackets. And if you are contributing from a deductible perspective into superannuation, what we call a concessional super contribution, then if you are in those higher tax brackets, you will achieve a greater tax outcome. So it might be better for people to look more about, not so much about claiming the co-contribution unless their income's very low, but rather how much they might contribute concessionally this year in order to reduce their marginal their tax rate at that margin.
Sounds like a very complicated. Now here's a question that comes up quite a bit actually. So, can a new instrument purchased and used in teaching in the 2020 tax year be written off completely under the current accelerated depreciation rules?
Sure, yeah, well look, as I covered before about the immediate write-off provisions, they do kick in from the 12th of March, so I don't think that teachers mentioned 2020 tax year, so if it's after the 12th of March 2020, and if they are a sole trader, so they're in a business, they're running a business, then they can claim the instant asset write-off, yes.
And it doesn't matter how much the instrument costs, does it, I take it?
No, it doesn't. It's up to, sorry, the threshold's up to $150,000, yeah,
right,
for the single asset, yeah.
A question from someone last week. By my reckoning, I am not quite to the point of having 30% reduction of income to qualify as a sole trader for JobSeeker. Now I have just purchased a laptop for my online sessions, etc. So I do have expenses to add. I'm looking at the quarter April to June. What can I do to tip my income into the 30%? And is it worthwhile doing this?
Yeah, well, there's sort of two different aspects to this question. There's turnover tests for JobKeeper, as this person has rightly identified that they have to establish under the basic JobKeeper provisions a 30% reduction in their income. The expenses, when they address the expenses really aren't, well, they're not relevant at all to any of the JobKeeper provisions. The JobKeeper provisions are simply looking at their income and not so much their expenses. So whether they've bought anything or incurred an expense is outside. They can't contra income against an expense in order to reduce the turnover. So there are various methods, and I'd encourage them to look at the other alternative test methods if they are going to be close in the quarter April to June. They can either look at it from a quarterly perspective, as they've sort of flagged here. They could look at it on a month-by-month perspective, so the month of May 2020 versus the month of May 2019. And again, it'll come down to the sophistication of their accounting records, because they may be in a position where they need to prove the eligibility down the track. But my experience from what I've seen with JobKeeper so far is the ATO are generally accepting the applications, but it doesn't necessarily mean that they won't question the eligibility down the track, which is typically how self-assessment works in the tax system. So yeah, I just flagged to look at some of the other alternatives, not necessarily look at the quarter April to June.
So I think you're saying that you have to be cautious about the rules here, isn't it, really, and take notice of the rules, because you could be questioned at some other stage later on.
Yes, that's right. We've had several alerts as practitioners to say that the ATO will be looking at JobKeeper eligibility. But having said that, politically, the government is saying that they will keep a very fair and reasonable approach, and they're really only looking for, deliberate acts to manipulate numbers. So I think if someone's shown reasonable care in how they've presented their decline in turnover, and under the various provisions that are online, then they'll be fine.
That's very good advice, Richard. Thank you. Next question says, I regularly meet music teachers for a coffee. Well, lucky old person meeting someone for a coffee somewhere. What they're asking here, they're actually saying that getting out is also a good thing. I'm sure it is. But is the coffee invoice tax deductible? Is it a tax deduction if you're buying coffee for that kind of a meeting?
Yeah, look, it's a good question and one that often comes up, actually. I'd simply say it's a yes if you are carrying on a business. So if you're an ABN holder, it's a no if you're an employee. So if you're meeting a student or you're meeting another teacher and you are in business, so you're an ABN holder, it most likely would be deductible, and as long as you, as I say, you're carrying on a business. But if you're an employee, most likely no.
Okay, and continuing on the theme of food and drink, this person says, I hold exam concerts in my studio before an exam. May I claim food and drink as an expense?
Yeah, the answer to that is yes, if it's on your business premises, which a studio would be a business premises, then absolutely you can claim it as an expense. And to add further to that, there's often some greyness around fringe benefits tax, but for that kind of presentation, a concert in a studio before an exam, it would be exempt from the fringe benefits tax provision. So yes, it is deductible. Okay.
This next question refers to subscriptions, like Audible. It says, if I have a subscription like Audible and I use credits from that subscription to purchase audiobooks, can I claim that subscription?
Yes, absolutely. So subscriptions can be claimed as a deduction. For further information on that, I'd encourage the teachers to go and have a look at the tax ruling 95/14 that I mentioned earlier, because it does cover those sort of costs as deductible.
Okay, and we're moving on now to a question about JobKeeper. For those who have been asked by their school to nominate for JobKeeper, will JobKeeper payments be taxed in the same way as any other income received?
Yeah, so the way JobKeeper works is that it is subject to tax. The employer pays, continues to pay the salary inclusive of the JobKeeper to the employee. So the employer claims it as a normal deduction in their records, and then the employee will just be assessed on receiving that JobKeeper as though it's their ordinary salary income.
Fair enough. A few more questions to go that we had as questions that were sent to us beforehand, and we'll try and answer a couple of questions that have come in during this webinar. Richard, can you clarify how an instrument used for teaching may be depreciated?
Sure, yeah. So with depreciation, what we're looking at is the estimated useful life. If it's over $300 in value, then the teacher is entitled to depreciate the asset, the instrument, but they've got two choices. The Deputy Commissioner of Taxation publishes estimated useful life tables each year, and hopefully the instrument would be included in there. They're either entitled to use the Commissioner's rate, and they'll be guaranteed that the Commissioner will oblige with that rate, or alternatively they can choose their own estimated useful life. So if it's a very exotic instrument that's not covered under the Commissioner's knowledge sphere, then they might want to choose their own. I'm not sure homemade instruments qualify. My kids would have a field day otherwise, but no, I think it's just instruments that would normally be purchased from a shop.
And there's a further question here on instruments. I mean, so many instruments have been bought in the last period of time completely sold out in most music shops. But this person says, if I purchase an instrument purely for work, how do I decide whether it's better to make that an instant write-off or deduction over a few years?
Yeah, look, this was a tricky and interesting question. My advice here would be, well, I'll say that you don't have to claim under the instant asset write-off provisions. So if you do buy say a new piano of $10,000 and your income isn't sufficient enough to benefit from a deduction of the entire $10,000, then you would be better to depreciate that piano over the estimated useful life, because there's no point in putting yourself into a loss position, albeit you could carry the cost forward. My advice there would be to defer the deductibility to future years by depreciating it. So defer if you've got low income, bearing in mind, everyone, that the tax-free threshold is around $18,200. So once you get to that point, if you are reducing your income beyond $18,200, you're not getting any tax benefit anyway, because you're not paying any tax. So you can only get a tax benefit if you're likely to pay tax.
Fair enough. I'm not today, Richard, about tax. It's very interesting. If the instrument is already worth more than the tax I would otherwise pay that year, do I have to go into detail of all my other business expenses, or is that enough?
Yeah, so this is an interesting one. You've really got a choice. If you want to claim an instant asset write-off, then you need to justify it based on the receipt that you receive. And if your other expenses, you don't need to claim them because your income's already below that threshold and you've got no other reason, no, you don't need to go into detail. You don't lodge the claim. But if you are going to make a claim for a tax deduction, then you must have documentation of proof of purchase or proof of cost. And typically receipts and invoices are the best way to do that.
Okay, here's an interesting one. What's the difference between operating as a business and a hobby? I've often wondered this, especially if you only have a dozen or less students and are likely to be making a loss. So
it's an interesting one, that a hobby is something that is not recurring and in nature. So it's a fairly sort of one-off, or it's not recurring in nature. Now, if you're showing a pattern of regularly seeing 1, 2, 3 students, then it could easily be deemed that you're actually in a business because you're showing a recurring pattern of behaviour. But if you've got normal employment somewhere else, and 3 or 4 times a year you might charge to see a few students who are practicing for an exam or doing something else, then you could be deemed to be a hobby. If it is a hobby, it's not subject to tax, but if it's business income, then you do need to obviously register for an ABN and file a tax return. So we've also looked in this question about making a loss. So if in your business, if you are seeing students, and perhaps this is the essence of the question, is this person better to say it's a hobby and therefore not worry about tax, or are they better to say it's a business and only have a few students but claim a whole heap of tax deductions against that because it is a business activity? So what I would encourage anyone in that boat to look at is what's called the non-commercial loss rules. So if you just Google Australian non-commercial loss rules, and essentially what those non-commercial loss rules are designed to do is to ensure that if people are running side businesses, that they can't offset a loss in those side businesses against their other employment income. Okay, and there are rules around it. There's income tests, so you need to show that you've had $20,000 from the business activity, or there's a profit test. You need to show that this business has actually had a profit at some point, or there's what's called real property test, or there's other asset tests. So if you're using other assets, so have a look at the non-commercial loss rules, and that whoever asked that question can make an assessment as to which way they're best to go, business or hobby.
Okay, here's a quick question. Just wondering if we can claim a portion of council rates for a home studio.
Yeah, look, short answer, if you're a sole trader, business operator, yes. If you're an employee under a home office, no.
Cool. Okay, so thank you for all the questions that have been pouring in, Richard. Regarding the different deductions, does it make a difference if the teacher holds an ABN or not?
Absolutely. Yeah. As an ABN, in simple terms, Australian Business Number. That's what ABN stands for. So if you are holding an ABN, you're running a business. So you're looking back at that extra deduction limb carrying on a business. Okay. If you're an employee, it limits the deductions you can claim.
Another one, can Google Maps data be used instead of a travel logbook?
Not so much Google Maps data, but there are certainly apps available if you don't want to keep a physical logbook. So, and obviously Google Maps data would tie into your the app anyway. But yeah.
Fair enough. We have a few more questions. We can just I'll keep going. Are trips for professional development claimable at least in part?
Yes, they are. Absolutely.
Okay. For private music teachers operating as sole traders from their home, does hours worked include only the hours of face-to-face lessons or additional time for preparation, follow-up, and so on?
Yeah, great question. It's the answer is the latter. So it's all inclusive. If you're preparing, that is included as well.
Okay, and I saw one that came in while you were doing your slideshow. Can I claim a cleaning expense if I'm doing the cleaning?
If you do it, no, you can't if you're doing it yourself, apart from the materials you use. So it's only your out-of-pocket costs. And again, only if it's your business premises, okay? So you're seeing students at your business, at your premises.
And finally, somebody also came in and said that, can I claim expenses for entertainment? I assume this person is talking about streaming shows live, because if they're watching live shows, I'd like to know where.
Yes, true. But it may be a question relating to before the time that we're currently in. And it comes up all the time for me. And look, I say a guarded yes. So if you are going to see concerts or performances that do relate to your area of teaching, then the cost of the tickets and the travel to and from and a program, if that's what you're buying, would be deductible, really is forming part of your research and training and development.
Excellent. And I think we'll close off there, Richard. I should say that we'll be able to share Richard's presentation with you. And I think you wanted to say something, Richard, about about JT&P, and you're happy for people to give you a call there. Was that correct?
Yeah, absolutely, Jeff. I'll get or Alana can put our details up if you like, or we can get them. But look, give us a call anytime. Everything in today's presentation really has just been general in nature, and just to give you a guide of some of the things you should be thinking about. But if you've got any specific questions, yeah, I'd encourage you to speak to your accountant if you have an accountant, or give our office a call. Our details will hopefully come up at some point, or Alana can get them to you.
Yeah, I think it's gone into. Yeah, I think your details just gone in the chat room, so people have got those now, Richard.
Terrific. So. Yeah, we're here to help, and we can certainly guide you a bit further if you've got any specific deductions. But good luck with tax time anyway.
Okay. Well, on behalf of all of us, Richard, thank you very much. Thank you for your time today, and thank you for answering some really interesting questions and quite complicated ones as well. We'd like to say thank you to everybody who's attended all of the webinars over the last number of weeks and months as we were locked away. At this point, we'll not be continuing on as things change again, which hopefully they don't. We go back to a normal sort of a life, but we've learned a lot here by listening to you guys, teachers, students, whoever you are, and we thank you for your contribution, and we thank you for your attendance. So thank you very much, Richard, again, and thank you, everybody. And we'll see you again soon.